Good evening, everyone. Time for another silver update. This is the daily chart of silver provided by netdania.com. You can click on the link below. As you can see, the very important downtrend line has been just barely breached. $30 was, my opinion, to be a key level, $28.50 and then $30. Now it appears that we really need to get through 31 and possibly up to 32 to take out two important levels. The first level is this rally failure point during the first really big rally that we had from about $17.50 to $48, $49, nearly 50. And you can see the second leg of this rally was the really big one, and it just absolutely took off through this point. So we've tried to get through that point, and we failed, and we tried again and failed. So it's really a key point. We seem to go below and above. So for this to continue, we really want to see 32, 32.50 taken out, and that will pretty much seal the fate of the people who've been calling this a crash or a top. And you can see, of course, the very, very large flag formation, that pennant formation that we're beginning to break out of. Now, the other thing is the MACD down here. You can see we actually have a significant break already in the trend line on the MACD. We're barely in positive territory at 0.6, but then again, the highest we hit was 2. So we are rapidly moving into a semi-overbought condition, and we could see a correction. So we're just going to have to see how far this run takes us. I really do think the bottom is in. I don't think that we'll see that $26 price or a test of that 22 level, which goes way back. Now for the question of the night. This comes from George Silver. He says, Dear Brother John, we are constantly told that gold and silver are both precious metals with a ratio of 15 to 1. So at the moment the ratio is completely out of line. We are also told that central banks are buying gold but have little interest or appetite for silver because presumably it's so scarce. Can you tell me why they are joined at the hip? If there is a move in silver, then you can be sure there is exactly the same move in gold. Why? Why should they both move at the same time? Surely the ratio should get closer, but it doesn't. They both move in lockstep. Something is wrong. Well, it's true and false. If you look at the quotes for the year so far, you can see that now silver is up 11% for the year, while gold is only up 6.85%. The percentage move on the day you can see is 0.7% in silver, 0.1%, 11% in gold. So 6 to 7-fold move higher percentage-wise in silver. Then again, if we divide 1670 by 30.6, we get about 54. So we're still at a 54 to 1 gold-silver ratio. Now, of course, the central banks don't buy any silver, and that would be the ones that I would say are in lockstep. Of course, no central bank in the world can buy silver because there just isn't enough of it. It would be a wonderful thing to see. I would love to see, say, a country like Iceland begin to remonetize silver just by beginning to take their foreign exchange reserves or whatever they have and begin to stockpile silver and back their currency with silver. Of course, that would cause just an outrageous reaction in the world. They probably want to have the UN declare war on Iceland or any other country that did such a thing. But the other question here is the lockstep movement. Now there is kind of a lockstep movement. If we do we can just do a gold chart and pull into, say, a 10-minute chart that gives us a closer time horizon, and then just select a silver spot and do an overlay. And you can see on the short-term basis, yes, that's a very, very tight correlation in those price moves. And of course, the reason why it's so tight is because of arbitrage and computers. Now, Bixweir in his latest interview has mentioned that these are just computers trading with each other, and for the most part that's what it is in these paper prices. It's just I think this number he cited was that there were 4 billion ounces of silver traded in July, and you know, who's trading all this silver? Well, obviously it's the banks or the bullion banks or the manipulators trading with each other to control the price. I completely agree with that. Now, but then again, there is arbitrage, and we see that especially in the stock market. I've covered that a number of times. You can pull up a chart of the Dow and you can put the big ones next to it, whether it's Apple, Cisco, Microsoft, or anything, and you can see how tightly they trade. Now, those aren't, they simply aren't real markets, and really most of the markets that we have today aren't real markets, and so there's pretty much just a bunch of computers trading with each other, and then of course the money is coming from the Federal Reserve, and so it's just a whole lot of fake markets, and you really can't put a lot of credibility in the moves. The only thing you can do is try to pick up physical silver when the price is low, try to pick up physical gold when the price is low, and just of course that's if you're stacking long term, just look for good buy points. Now, that does bring up a very interesting point for me, which is the Bitcoin, and this is actually a chart of the Bitcoin, which I've been trading a lot lately because the spike recently I dumped them all and then bought them back around here and then sold some off, and I've just recently gotten in long again here right as we started to turn up. Now, what's so interesting about this is that this is actually a real market, and the way you can tell it's a real market is you just look at the volume and look at the prices. So all you really need to look at, and you've also got your time and sales down below here at bid and ask, so it's a completely open market. But what you can see here is that you had a big sell-off, and then it brought in buyers, which that's what sell-offs do, is that low prices bring in buyers. I was one of those buyers, and of course then we got a rally. You can see with the green bars here that it rallied a bit until we got smaller red bars, but it wasn't enough to sell it off. We got a fairly big sell-off there, which brought in more buyers, and we just kind of leveled off at about 10. Then we had some more buyers come in here, which gave us a little spike. We sold off, but then a huge buyer came in here, caused a rally, and you can see follow-up buyers. So the price is very understandable based on the volume. It becomes a very easy market to trade because this is actually the way all markets should look. Of course, gold and silver don't look anything like that because they're completely manipulated markets. So when you put the volume in, you can see something similar to that here with this spike, but then again, at night and other times we can have massive sell-offs on very little volume. So it's very sad to say that the Bitcoin market is one of the more honest markets that's out there, but of course it's not controlled by the government, and that's going to be the key of the article that we're going to look at tonight, and that is from the Daily Bell, and that's about this Republican call for having a gold standard as part of the platform. Now, before we get into this, and it's going to explain this quite a bit, I wanted to mention that they mentioned that the U.S. has gone off the gold standard, or went off the gold standard in '71. Well, that wasn't a real gold standard. Having it illegal for Americans to own gold and having it legal for foreigners to exchange their dollar bills for gold, that's not a real gold standard. That's not what any reasonable person would propose. I think the Republicans probably will propose something similar to the old standard, which is just a rigged government standard, but I don't think the Republicans have any intent of returning to a free market system, a bimetallic free market interest rates and money. They're just trying to throw a bone to the Tea Party side and some of the libertarians to suck them into this R&R ticket. But anyway, let's read this article. Is a state-run gold standard really the answer? Republicans' eye return to a fixed value for the dollar. The Republican Party is set to call for the creation of a commission to look at possible ways to set a fixed value for the dollar. 40 years after President Richard Nixon ended its link to gold, a draft of the party platform to be adopted at the Republican National Convention next week in Tampa, Florida, ties the plan to cleaning up the wreckage of President Obama's policies. The proposal recalls a commission created in 1981 by President Ronald Reagan to consider restoring the convertibility of the dollar into metal. The commission advised against such a move in the end. Quote, now 3 decades later, as we face the task of cleaning up the wreckage of the current administration's policies, we propose a similar commission to investigate possible ways to set a fixed value for the dollar. Well, that's anything but a free market. The platform would say, according to the draft language provided by Reuters, by a Republican National Committee official who declined to be named. Reuters. Dominant social theme. Gold is good. And if Leviathan is setting the price, so much better. Free market analysis. The problem with the state-run gold standard is that the state is running it. Facetiousness aside, this article gives us the opportunity to once again analyze what the gold standard really is and how a free market one might work. It is probably safe to say that whatever the GOP comes up with will be less free and less adequate than what is called for. Worse, in our humble opinion, whenever such issues arise these days, the dissemblers come out in force to attack the world's only apparently honest politician, U.S. Congressman Ron Paul, for working with Lewis Lehrman. It's true that when Ron Paul and Lewis Lehrman served with many others on a U.S. Gold Commission during the Reagan years, they wrote a minority report recommending a return to some sort of gold standard. But Ron Paul certainly didn't seek Lehrman out to write the report. He wrote it with Lehrman because Lehrman was on the committee. Ron Paul, of course, went on to call for a regime of competing currencies, which is something we're partial to. Within such an environment, we think gold and silver would find their rightful place. Let's examine gold standards for a moment. We will turn to Wikipedia for a rough approximation of different kinds. Here's some relevant text. The gold standard is a monetary system in which the standard economic unit of account is a fixed weight of gold. There are distinct kinds of gold standard. First, the gold specie standard is a system in which the monetary unit is associated with circulating gold coins, with the unit of value defined in terms of one particular circulating gold coin in conjunction with subsidiary coinage made from lesser valuable metal. Similarly, the gold exchange standard typically involves the circulation of only of coins made of silver or other metals, but where the authorities guarantee a fixed exchange rate with another country that is on the gold standard. This creates a de facto gold standard in that the value of the silver coins has a fixed external value in terms of gold that is independent of the inherent silver value. Finally, the gold bullion standard is a system in which gold coins do not circulate, but in which the authorities have agreed to sell gold bullion on demand at a fixed price in the exchange for the circulating currency. Now, this gold bullion standard, this is the standard that we were taken off of in 1971, except that the authorities agreed to sell gold bullion on demand at a fixed price only to foreigners and not to U.S. citizens for whom it was illegal to own gold. The U.S. had a gold and silver system in the 1700s and 1800s where the conversion rate of gold was fixed at a ratio of 15 to 1. The trouble came when massive quantities of silver were discovered in the later 1800s and the value of silver diminished, making the 15 to 1 ratio questionable. On this issue, a great battle was pitched, and the eternal lesson we can learn, as usual, is that government should not fix prices. I could not agree more. Now, I've done videos in the past that cover the constitutional requirements for money and also the Coinage Act, which actually fixed the value of the dollar at specific grains of silver. Now, I don't believe that it fixed the value also at grains of gold. I don't think they originally linked the two together. Of course, the best standard would be a free-floating bimetallic standard where the market would fix both the prices of silver and gold. Now, in the case of today, the reason why we don't want them to be fixed is obvious that the price of silver needs to actually come to 10 or 5 or 2 or even 1 to 1 with the price of gold due to its rarity now, which is the exact opposite, which got us into trouble last time when the Comstock Lode and other things came online with a fixed value. That caused tremendous crises because there was so much silver being mined in the West. And of course that caused the crime of 1873 and all kinds of other shenanigans that went on, none of which had to happen if we would have been on an honest bimetallic free market system. When government standardizes a fixed exchange rate with another country, the same issues can intrude. Great discoveries of gold and silver can skew ratios and provide advantages to one party or another. The same problems arise when government fixes the price domestically. A price that is fixed into law is always bound to cause trouble because the value of gold and silver fluctuate depending on hoarding and new mine discoveries. The only operative gold and silver standard that will work in the long run is one that allows values and prices to float freely based upon supply and demand. This is perfectly reasonable but very hard to attain because people organizing such ratios are inevitably associated with government. Government is the great meddler. You can have sound money or you can have government money, but you can't have both. Don't expect to learn anything about this in the mainstream press. One of the greatest goals of the mainstream media is to confuse people about money. This is one of the media's only areas of competence. Here is some more from the Reuters article on the GOP platform. Marsha Blackburn, a Republican congresswoman from Tennessee and co-chair of the platform committee, was quoted earlier in the day as saying these points were not an effort to placate Libertarian Representative Ron Paul and the delegates he picked up during his campaign for the party's nomination. Quote, "These were adopted because they are the things that Republicans agree on," Blackburn told the Times. Quote, "The House of Representatives recently passed a bill on this, and this is something that we think needs to be done." That's very interesting. We didn't see any of this proposed under George Bush's 2 terms. Again, it's not clear what needs to be done. Is government about to fix the price of gold again? Lord help us. Money is really quite simple. Is anything we agree upon? Gold and silver, it is anything we agree upon. Gold and silver have emerged universally as money from time immemorial because these elements are malleable, portable, beautiful, and durable. In other words, they're money. Copper, brass, iron, corn, salt, nothing else quite fits the bill, which is why gold and silver has always reoccurred and have held value despite the power elite's continual efforts to remove both elements as circulating money. The elites certainly hate gold when it is fully and freely circulated, and let me add an emphasis, the elites hate silver even more because that is their Achilles heel. Nothing erodes money power more significantly or quickly than a circulating precious metal standard, especially one that the market itself moderates. That's the reason for all this renewed talk about gold standards, of course. The elites are trying to stay ahead of the curve. As monopoly central banking founders in the 21st century and is increasingly seen as immoral thanks to what we call the Internet Reformation, the powers that be will likely start to promote some sort of precious metal standard, perhaps within a basket of IMF SDR currencies. If you hear such promotions, please ask why the government has to be involved with money at all. Like almost everything else, it would operate a great deal better without government involvement, or so it seems to us. Conclusion, don't believe it. Enlighten us, please, as to why any one group of individuals needs to be in charge of something so important as money. We'd really like to know. So, excellent article. Clears through all the muck and mud and slime and confusion of the mainstream media. Lays it out very clearly, something that I've always proposed, that we need to have a silver and gold backed bimetallic, free-floating, internationally as well as internally, standard for money, and also a free market standard for money where other things can be used as money, such as Bitcoin. Now you can see we're having a little Bitcoin sell-off here. So it's much better to have the free markets in charge of money than have the government in charge of money. Gold and silver are trending higher. We can see if we pull up the daily, they're both trending higher, but this is, again, just the paper price. We may see some very violent disconnects between these paper prices and the real physical prices when we start to see these move, because of course when silver and gold really start to move, that's again when the public starts to get interested, and then we could really see some explosive rallies. And we'll talk to you next time.